Hello and a very warm welcome. You're watching the Newstrack. I'm Rahul, Kanwal. We're broadcasting on a day when the government put out the gross domestic product growth numbers for the last quarter. And make absolutely no mistake, the Indian economy faces a severe crisis. This is the biggest challenge the Modi Sarkar and the Indian people face at this time. The India Today Data Intelligence Unit did some very basic calculations. We pulled the graph from now into the future to say if the Indian economy were to grow at the current rate, at the rate at which it's been growing in this quarter, which is 4.5%, it will be in 2033 that the Prime Minister's target of a $5 trillion economy will be met. Yes, you heard that right. 2024 is what he's promising. 2033. It will take 9 more years than the Prime Minister's original promise for the Indian economy to hit that big magnum target of a $5 trillion economy. What's going wrong in the manner in which the Indian government is handling the Indian economy? They've rolled out almost 3 dozen measures between the budget and now. Why haven't these been able to bolster the speed of growth of the Indian economy? Joining us on this very important conversation, I want to welcome first Jai Panda, one of the most erudite voices in the Indian government on the economy, spokesperson for the Bharatiya Janata Party. Nilesh Shah is one of India's best-known investors, managing director of Kotak Mahindra Mutual Fund. Welcome, sir. We've got on this broadcast Sunil Alag. He's a management consultant and advisor. Rajiv Desai is a political analyst. He's worked in the past with the Congress party very closely. We've got Niranjan Hiranandani. He's the co-founder and managing director of the Hiranandani Group. When we interviewed him in Mumbai, he said the government's been administering kerosene. What we need is chemotherapy. Where is that chemotherapy going to come from? And last but not least, by M.K. Venu, who's a well-known business journalist. First, the economy has grown at the slowest speed in real terms in the last 6 years. But if you were to go back and look at nominal GDP growth, this is the slowest growth since March 2009. And I'm saying this to put things in context because it hasn't been this is the second slowest growth in the last 15 years. Jai Panda, your government, sir, promised that the Indian economy would grow in double digits. In your 6th year in power, your delivery is less than half of your promise.
Rahul, I think we should all recognize that the growth rate, though it is not optimal, and obviously we aim for higher and steps are being taken for that, but we should not be alarmist. We should look at the challenges in a rational manner and recognize that first of all, the slowdown is part of a global situation that has existed for about 12 to 18 months. Because as recently as last year, in the last fiscal's first quarter, India was growing at more than 8%. Now, this slowdown is of concern. And as you have rightly pointed out, a large number of steps have been taken by the government to try and correct it, such as dramatic changes in the tax code and the tax rates and many other steps. But we must also recognize that just like a car has a turning radius, and if it's a small car, it can be turned around quickly, and a large vehicle will have a larger turning circle, large economies can't be turned around in 1 quarter. When you've had challenges for the past several quarters, and the growth rate has slipped to 4.5%, the steps that are being taken have been received very well in the stock market, which means the signals are right. Those who invest in the stock market recognize that the steps that the government is taking are correct.
One of the most dangerous things, Mr. Jai Panda, the government can do is start looking at stock market numbers, and you're way too smart for that, Mr. Jai Panda, because the markets have a mind of their own. We have had a very narrow rally, largely in marquee blue chip.
No, markets are not irrational.
Sir, markets are not irrational. Governments referring to how markets are doing to suggest because the markets are doing well, therefore the economy is doing well. That is what is irrational as an argument, sir.
No, I didn't say that. I think you are misquoting me. I think your viewers deserve better because I very clearly said this and you are misquoting me. I did not say that because the markets are doing better, the economy is better. Let me rephrase it again. I said the immediate positive market sentiment is a good sign that investors recognize government is taking the correct steps. I also said large economies take longer time to turn around, so that sentiment to be transmitted to investment on the ground and for the growth rate to pick up should take 2 to 3 quarters. That's what I said.
Okay, I want to go across to MK Venu on this, because this is an argument that we heard from the Department of Economic Affairs as well in the press conference that happened after these GDP numbers came out. They're saying, okay, look at the markets. That's where the smartest money managers are. They know what they're doing. The markets are at historic highs. Therefore, all is well. Don't worry. This is a temporary setback. The economy will bounce back because the markets think we're doing well. Respond, Mr. MK Venu.
Rahul, I will just give you one simple fact, which is, you rightly said that the stock market is going up based on BSE 30 stocks, NSE 50 stocks. Even within those 50, barely 4 or 5 or 6 stocks are actually going up because of the market is showing a big sort of jump up. And even within those 50, about 50% of the stocks are actually down. And more than that, Rahul, I would want to point to Jay Panda, who's a friend of mine, that thousands of companies, listed companies in the middle and what is called mid cap and small cap, they are down nearly 50%, and they are in a what you call a bear grip. People are reeling under the collapse of the smaller companies, listed companies, and the mid cap listed companies. And if you look at the broader universe, it reflects, Rahul, the state of the economy. Just as the economy has come down from 8% to 4.5%, halved, a large number of companies, in fact, I would say 95% of the listed companies, I would say 98%, are actually down 50%. That is the reality. You ask any
Nilesh
fund
Shah
manager,
understands the markets better than anyone else on this show. Nilesh Shah, it is a fact that the markets are at all-time highs. It's also a reality that this is amongst the narrowest rallies that we've seen, especially the last burst of growth in the stock markets have come from foreign institutional investment, and we know how fickle FII money is. It can come, it can go. The government says, and it said it twice over, Jay Panda is saying so, and the DEA said it as well, that the markets are doing well. They are rational investors. They know what they're doing. The setback is temporary. We will bounce back from the next quarter itself. Things will get better. Do you buy that sense of optimism, or do you think this is exactly what they said when the Q1 numbers came out, after which we fell even further? Therefore, there is absolutely no guarantee that we've hit a bottom and from here we'll bounce back.
Clearly, there are certain fundamental issues which are being tackled, and there are more which needs to be tackled. 4.5% growth is not aspirational growth, and we have to figure out what can be done to improve from here. And let me just point out 4 compartments where we have to improve. One is Indian, whether he is Jai Panda or Mr. MK Venu or Nilesh Shah, we have to give away our obsession of gold. In last 8 years, as a country, we have remitted $245 billion abroad for net import of gold and precious stones. This is the capital which we need here to build infrastructure, to build healthcare, to provide education, but we are remitting abroad. This is like a patient who wants his health to improve but insists upon giving blood donation. That patient has no right to ask a doctor why his health is poor. So as citizen, I need to ensure that my savings remain in the country. Second is related to, let's say, judiciary. We have many rules of law, but the execution remains poor. Technically, if a check bounces after certain process of law, one can go to jail. But there are 4,040,000 lakh cases which are still pending. Businesses require rule of law. A justice delayed is justice denied. If we can create rule of law, growth will automatically come. The third compartment belongs to, let's say, bureaucracy. Clearly, we have done lots of good things in the country, but are the businessmen on the ground feeling positivity towards investment? It's reflected in gross capital formation, which has dropped down to meager 0.1%. And it is not just the central government, but it is also the local government, the state government, and the entire machinery of governance, which has to encourage entrepreneurship rather than blaming them or punishing them. The ease of doing investments have improved, but we have to ensure that it is felt on the ground. The fourth and the final thing from my side is that growth cannot happen without money. In April to mid-September 2019, the fund flow to commercial sector has fallen from 7,36,000 crore to 91,000 crore. It's a drop of 88%. If all the person on this panel have eaten for last 6 months just 12% of normal food, and then they are asked to run a marathon, they will all collapse at the starting point. But no growth can happen without money, and fund flows to commercial sector has come down for a variety of reasons. We need to ensure that the transmission of credit is opened up, it is not choked down. If we can manage as citizen, as bureaucrat, as regulator, as judicial authority, as government, as businessman, then I am sure from 4.5% growth can recover.
Nilesh bhai, you're blaming everyone except the government. You're making it seem as if citizens need to do their job, companies need to do their job, the judiciary needs to do its job. You're not asking any questions of the government at all. Jai Panda, the fact is, if you look at these GDP figures, and if I remove the non-government growth, remember, government spending is one part of growth, then there's private investment, then there is consumption. So if I remove the part if I look only at non-government GDP growth, that is down to 3.05. So it's largely government which is pumping, government expenditure which is pumping up the GDP at this time. Otherwise, we're actually down to 3.05%. The government, Mr. Panda, needs to take its share of the blame. If there is as much money being remitted abroad, one of the primary reasons for that is that Indian industry, and former Prime Minister Manmohan Singh referred to that, Indian industrialists seem to have, for various reasons, lost faith in this government and lost their appetite to invest in the India story, which is why Indian money is going out instead of being invested in the Indian economy, and the Indian government needs to take its part of the responsibility for this, Mr. Panda.
So Rahul, first of all, I think you were being very unfair to Nilesh ji, because I think he gave a very rational and candid and balanced analysis where he pointed out the problems that the economy is facing, including what the government needs to do, but he also put it in a realistic manner. Now, don't forget that this growth rate that has just come out today represents this last quarter during which all these governmental policy decisions have been implemented. Whether it is the tax rate pruning and the tax code changing and the labor codes that have been put into parliament, whether it is the merger of the public sector banks and many others. Now, this, as I said, for a large economy will take 2 to 3 quarters to be reflected in the GDP growth rate numbers. That's one. Number two, please recognize and admit that the IMF predicts that in 1 year's time, the Indian economy will be back up at being the fastest growing economy. This is the IMF's prediction. And certainly they know a thing or two about economic growth rates. Also, two more things. If you say that government is not doing its bit, and you said it's only because of government that the economy is being boosted, then you are contradicting yourself. Of course, when the economy faces challenge, every government has a stimulus package, whether it is America, whether it is China. And yes, government is doing this. And today, the finance minister, yesterday and today, has asked for more releases from parliament to be investing, including in places like Jammu, Kashmir and Ladakh. So yes, it is government's responsibility to spend and boost the economy when there are challenges faced. I want to end with just two more things. Don't forget that in the last 5 years, India has received $286 billion of foreign investment, foreign direct investment. That represents fully 50% of what we received over the previous 20 years. So that is a very big factor which will have an impact in the coming quarters in India. Don't also forget that yes, like Venu said, that some sectors of the market like mid-caps are facing challenges and some in the larger corporates are doing better. That's true. For example, the 5 largest IT companies have in the first 6 months have a net 18% growth of employment. We must not forget that the Amazons of the world, the Apples of the world are investing in India in a very big way now for the first time.
Can I explain the problem with the government priming the economy and being the primary driver of GDP growth? No, Mr. Jayapanda, let me quote some figures. I want viewers to understand this very deeply. The government, one second, I want to put this. Between April and October, the fiscal deficit, which is the gap between government spending and revenue, has already exceeded the full target for the year. So, India's fiscal deficit for the first 7 months till October stood at 7.2 trillion rupees, about $100 billion, which is 102.4% of the budgeted target for the whole year. So what we had to spend till April, the government's already spent in October. Tax receipts were at 6.83 trillion rupees. Total expenditure at 16.55 trillion rupees. So the government's trying really hard through its expenditure to pump the economy. But that is not a limitless cycle, Rajiv Desai. If you're banking primarily on government expenditure, pushing up the Indian economy, which is what Jayapanda says happens at a time of crisis, the reality is in October, we've already spent more than the government planned to spend till April next year. Rajiv Desai.
Rahul, I have been saying from the very first budget onwards that none of the political leadership in this government has a clue about the economy. And that's why they then indulged in adventurous policies like demonetization, like a sloppily implemented GST, and so forth. So, and then too, they're busy in politics, in Maharashtra, in Goa, in Arunachal, wherever. So they don't understand, B, they don't have time. And I have been saying from the very, from 2016 onwards that the Indian economy is in free fall and it's going to go down so rapidly that you won't be able to blink your eyes fast enough.
Let Jayapanda respond to this.
Is
this perception that the opposition is building
has no clue about the economy.
Government and the managers of the economy are clueless. Inko samajh hi nahi aati economy. That's the charge that's flung the BJP's way. That jitne padhe likhe log the unko hata diya. Now this government is clueless. That's the charge the opposition is now throwing the BJP's way, Mr. Panda.
I've been saying this from 2015. 1 minute, Rahul, let me just finish one more thing.
No, one second. Allow me to moderate, please. No, one second. You made a point, Mr. Desai. It's a very... No, one second. You flung a very serious charge at the BJP and the government. Let Jayapanda respond, then we'll continue.
Right. So, none of these allegations were made 1 year ago when we had 8.2% growth rate, fully 2.5 years after demonetization. So that's not a rational argument. And Rahul, first you said the government is not doing enough. Then you said the government is doing too much by spending too much. But let me complete, please. Let me complete. Then Rahul, you said that the government is doing too much. It's spending too much. But that's exactly what governments do during times of challenging periods in the economy. Now, you talked about the fiscal deficit and tax revenues. Yes, admittedly, the GST revenues dropped below 1 lakh crores, which was a major milestone which had recently been reached. But remember, in September, it went down to 91,000 crores. And in October, it has come back up to 95,000 crores. So that's a little hopeful statistic. Let's also not forget that the fiscal deficit management over the last 6 years has been phenomenal. Everybody has been complimenting the late Finance Minister Arun Jaitley and now Nirmala Sitharaman ji for the conservatism with which the government has managed the fiscal deficit. But there are many voices who are saying that perhaps this is a time that the government can relax a little bit on the fiscal. I'm a fiscal hawk normally. But if you have challenging times and the economy does need a stimulus, there is nothing wrong in the government spending a little extra for a few quarters to make that happen. You're also beginning to see rural demand pick up. There has been an uptick in this last quarter. These are hopeful signs. And regarding the confidence level of business, I think that's a fair question. Please recognize that many of the problems, whether it is banking NPAs or whether it is companies that have collapsed, relate to loans that they took more than 10 years ago from a previous regime, which we are still grappling with and trying to correct.
Okay,
And
so
in
let
the
me put that
meantime,
question to
that
Niranjan
it has become
Hiranandani.
gradually
He's the co-founder and
easier to
managing
do
director
business
of the
in India.
Hiranandani Group.
It's a
Massive
fact,
interest
as
in
per the
real
World
estate.
Bank's
Mr.
index.
Hiranandani, former Prime Minister Manmohan Singh said earlier in an editorial, he repeated it today at a conclave of various economic advisors, that the primary reason is that industry has lost trust because of tax terrorism, because of the fact that they feel that the government is highly suspicious, watching every move. Industry has lost respect, has lost confidence in this government. Now, here are some facts. You know, again, J.I. Panda refers to government spending. Government spending cannot be the solution. Whether they spend too much or no matter how much they open their purse strings, till the time private investment gets into the act, government spending will not fix the Indian economy. Now, new private investment is at a 16-year low. Industrial output growth is at an 8-year low. Core sector growth is at a 14-year low. These are realities. Mr. Hiranandani, do you accept the contention of Manmohan Singh that industry has to a great extent lost faith in this government, which is why they're not wanting to invest in India? They'd rather either sit on their money or send it abroad.
I think, Rahul, the issue is slightly different. And I think we really need to focus on solutions rather than say that the situation is so bad that nothing can be done, whether by private or the government or anybody else. We have recognized very well, and that is across the board now, that we are in a recessionary part of the economy and the economy is moving down. I think the first step which has been taken on the supply side was reducing the tax rates to 25%, which is the good thing and the first step taken to handle the cancerous situation, which I thought is necessary to do. But there are two other segments which I think government still has to do. One is the issue of liquidity in the economy. Even for companies which are existing today, forget fresh investments, they are not getting any credit from the banking system, and the NBFC system is totally dead. Number two, as part of the liquidity crisis which is taking place, a large number of companies are in a liquidity trap and they need a one-time rollover that we talked about in 2008, which was done by the Reserve Bank, so that further companies in mid-cap, small, SMEs, developers, real estate segments do not get into it. Otherwise, in the next 6 months, you're going to get far more NPAs coming into the market than it is there, even though the companies are into a economy. So an intervention required by the Reserve Bank of India to improve this credit situation to do it. Yes, the companies, even those who want the money, are not getting it from the banks. So forget about more businessmen wanting to expand the market for the purposes of do it. There is a strong liquidity crisis that you need to do. What are you telling people to invest more into the economy when you don't have the possibility of banking systems supported? The third part of it is, I do not believe that the demand situation has gone up to the extent that is being now projected. I think the demand is definitely come down. I was on a flight 1 hour back and I was talking to two people, people who are in the food business, restaurant business, and another person who's in the designer business. He says business is down by 50% across the board. So I don't agree that the demand situation is sufficient enough to pick up the economy in the next couple of weeks or months. I think we need to do a correction in terms on the demand side, maybe a strong across the board reduction in GST by 20-25% for the next 6 months. I know it means 1,20,000 crores of rupees of additional infusion on the demand side. So while you have talked about the correction on the supply side, I do not think that there is sufficient liquidity available to the businessman, even if he wants to. Forget about his strength of saying, I want to invest. Even if he wants to invest, the liquidity situation is not adequate enough for him to take it off. The banking system is absolutely
to Nirmala Sitharaman,
frozen, completely
since
frozen.
She assumed charge as finance minister, she has rolled out a whole slew of
Rahul,
measures. Despite that, the economy hasn't picked up just yet. Why do you think that's the case?
You know, it's great to come in at this point of time. You're like the seventh husband of Elizabeth Taylor, and you know what you have to do, but how to do it differently. Almost all people have spoken on various aspects of it. Look, for me, I've criticized the budget from in July itself, saying that you are doing everything on the supply side, and the 300 million middle income group who actually spend money are saying, what have you done for us? They should have reduced the tax. Forget about GST, this, that. They don't understand all this. As far as they are concerned, you have to put more money into their hands. It is the oil in the engine which is missing, because once you put that oil in the engine, you give them money, they start spending, industry will put money behind what they've got, employment will go up, and the virtuous cycle starts. Look, nobody seems to be bothered about the 300 million or the agricultural part. Where is the money? Look, you're spending on people on the real estate side. Okay, all homes which haven't got completed, you're giving them money. But who's going to buy the homes? You're actually doing things on one side which is going to take you into the next year, which says, still, what do you do? Now, until the perception, even now, when you give money into the hands of the consumer, the perception has to change to spend. Why will the person who's got more money is keeping the money in the house? He's not even putting it into the banks, because he's losing confidence in the banks now. And I'm not talking about the very rich who it doesn't really matter. They can go and spend money wherever they want. It's the middle income group which is saying, until you make me spend, this economy is still going to carry on the way it is, because as lots of people have said, money has been spent. Everything is going in the right direction. I'm still an optimist, because you see demand in the rural sector going up now, November, December, but it will be the first quarter or the second quarter of next year, as Jay Panda has pointed out, that the impact of all the steps being taken now, which will play off.
Okay,
and look,
I want to take a quick break at this
people.
moment.
Let's not forget that.
When I come back,
Once
I want to ask
demand
this
is
very
generated,
distinguished
that's
panel
where it
this
is.
question. Will the Indian economy bounce back from here? Because ultimately the critical question is, are we now at a bottom? When, just at the moment at which the very alarming at that time 5% number came out for quarter one, the government said, you know, from Q2 the economy will start picking up, things will get better. That didn't happen. Will things indeed get better in the second half of the year, or will things get worse? The pessimists feel that this is a recessionary cycle. Nirmala Sitharaman very strongly opposes the use of the word recession, saying this is a slowdown, a pickup in the economy is expected very soon. We'll deal with that question when we come in on the state of the Indian economy, which is worse than it's been at least in the last 6 years. By some measures, it's worse than it has been in the last 10 years. Will things get better from here on, or will things get worse? We've got Jai Panda, Nilesh Shah, Sunil Alag, Rajiv Desai, M.K. Venu and Niranjan Hiranandani. I want to go across to Nilesh Shah first. As somebody who's looking at the growth numbers of India's companies very closely, do you see an uptick in the last 6 months of this year, or do you think that the economy will slow down even further before a bounce back begins?
The October numbers of electricity drop, which is 12%, does not necessarily give the confidence that December quarterly GDP growth number will be higher than September 19. However, we have time for the month of December and thereafter. We need to tackle some of the constraints which is restricting economic growth. Mr. Hiranandani talked about credit crunch. We have to ensure that credit transmission happens. The second thing is related to, in the near term, something like trade deficit with China. If we put money in the hands of Indian consumers, it should not result into buying of Chinese goods. As a percentage of GDP, we have one of the highest trade deficit with China at $58 billion last year. I have to encourage Indian goods, and I have to stop Chinese imports into our country. Third thing which is related to is again on a short-term basis bringing interest rates down. The real interest rate burden on corporate India is 6.5%. you rarely make that kind of return on real basis in equity. On debt, it is too high. So concentrated effort will be required to pull economy out of current subdued phase. Interest rates, trade deficits, credit transmission, all will be necessary to make the momentum positive.
You know, one of the measures that was suggested, Jai Panda, by Sunil Alag is put more oil in the engine, reduce the tax rate of the 300 million people in the middle class. That will give an immediate impetus to consumption, which is what is required to jumpstart the Indian economy. But the problem is, the government's already given a concession to corporates by reducing corporate tax. How many concessions can the government get? The level of desperation and anxiety and desire to do something to get things going is high. But it's not as if the government's been able to press the right buttons to actually jumpstart the economy. How many concessions can you give? You also need money to keep the government surviving.
Again, I think that's an unfair question, because I've repeatedly said that whatever buttons have been pressed, you should not, it's not a TV set that you press the button and the screen comes on with Rahul Kanwal. As I said, this is a large economy. If you press the button, it takes 2 to 3 quarters for the screen to turn bright. Now, I think the important suggestion that has come from both Mr. Hiranandani and Mr. Nilesh Shah is very, very important. This is about credit transmission. Now, please recall, Rahul, for most of the past 5 years during the first term of Prime Minister Modi's government, this was an issue where the late Finance Minister Arun Jaitley kept asking the RBI to drop interest rates because inflation was low. But for quarter after quarter after quarter after quarter, even though we had very, very bright people at the RBI, they kept saying, no, inflation is going to rise, we are not going to drop interest rates. And that tussle, you know, how it played out. Now, in the last few quarters, the interest rates have been dropped quite a lot. Despite that, you just heard what these two very knowledgeable people are saying. I'll quote Indranil Sengupta, who's also an economist, keeps saying that this has to be the main thrust, that there has to be more cutting of interest rates and transmission of credit to give this boost to the economy. And you know, I may personally agree with that, but this is where the RBI has independence and they have to decide. The other thing is about confidence, about bank lending. Now, on the one hand, the government can't not take action when you have scams like what you saw in that bank recently in Maharashtra, or in other companies that have clearly scammed the system with NPAs. So that has to happen, but at the same time, there should be further easing. Steps are being taken to on the ease of doing business index. We have had dramatic improvements from 140 something to 63 now in the world. The Prime Minister's ambition is to get India into the top 50. More steps will be taken so that it's easier for business to invest, so that it's easier for credit to be transmitted. But these will take 2 or 3 quarters. I don't want to make a prediction for next quarter. And I will again repeat, the IMF says that in 1 year's time, India will be back up at as the fastest growing economy.
But I also want to point out to our viewers that the State Bank of India, nonetheless, projected recently that the Indian economy will grow at 4.9% for the whole year, which essentially means that various houses like the SBI are no longer expecting that the economy will jump in Q3 and Q4, which means that it could stay as bad as it is or get potentially worse. MK Venu, do you think things will get better as the government keeps telling us in Q3 and Q4? Do you think they'll stay the same, or could it get even worse?
Rahul, I tend to agree with the State Bank of India's projection that in the next 2 quarters, it would be pretty much between 4.5 to 5%, and overall the number will be less than 5%. And Rahul, the reason for that is very simple. Now, people are talking about cutting interest rates. Now, so far the amount of interest rate cuts that have happened, barely 25% has got transmitted, 25 to 30. The rest of it has not got transmitted because, Rahul, there's a problem of capitalization of public sector banks. Now which we went through for 5 years, and one of the problems that Mr. Arun Jaitley did not address, or the NDA government did not address, was that it did not really do a one-time capitalization of banks and bring confidence in the financial system back. All the capital infusion happened in dribs and drabs, and in the first 5 years, we got decent GDP growth because of government spending, and also because, Rahul, the NBFC sector had nearly 70% of all incremental credit came from NBFC sectors, and unfortunately in the last 2 years, last one and a half years, NBFC has also collapsed. There is hardly any lending from NBFC, which is why you have that data, overall data of credit to commercial sector coming down by 88%, which Nilesh Shah rightly said. Rahul, if you reduce your diet by 88%, you will lose your existing muscles. Do you think you will be able to do your morning run with this kind of reduction in diet? Now, I don't know when this part of the problem will get corrected. Will it get corrected in the next 3 months?
Okay.
Next,
Sunil Alap, do you think things are getting better from here, or will things get worse? When the State Bank of India, which is the government's own bank, says the annual growth rate will be 4.9%.
No, I am really surprised at everyone. They are missing the point that, look, at the end of the day, you can keep on giving liquidity, you can give everybody, industry, all the money they want. When will they produce? Only when the demand goes up. So what's the point of only discussing about when the banks will lend and this will lend and that will lend? If you do not put money in the hands of the consumer, as far as I'm concerned, all this is going to result in nothing. I'm an optimist. Then where will the money come from when you give the tax? Sell the stuff. Air India is going to be sold. So many companies have been put. For 1 year, get the money into the government. It's a one-time move. Give money into the consumers and they will spend it. Look, at the end of the day, no matter what you talk about, the big terms, I've done my eco honors and nobody in the road understands all this. Talk to the consumers and find out. Their whole perception on the economy has to change. You have to market India. Industrialists are scared. You have to drive the element of fear out. Why are you criminalizing every single thing that an industrialist does? And somebody talks about moving up the ladder on doing the ease of business. We are 177 in getting a contract executed. Remember that all foreign companies look for, when they sign a contract, we are way down as 177. So overall you might go up to 70. The key elements for investment are missing. Look, for me there are very simple solutions to all this that we are discussing. Every single thing has to be done. We are swaying the economy towards the supply side and ignoring the demand side completely. So I am still optimistic.
Okay, and I also want to put this in context. You know, so far there hasn't been a single protest by the opposition. Well, one second. You know, while this is the biggest issue of the day, the opposition has been delaying its protests. Venu, you know, they haven't had one single dharna. They keep announcing they'll do a dharna. They keep postponing it. The opposition has failed to hold the government to account when this matter was being debated in Parliament. BJP MPs, of course, were sleeping. Those pictures went viral. The House had very scarce attendance. It's not. If this is the biggest problem India faces, that problem is not being taken seriously.
Yeah, absolutely, Rahul. I agree with you. We've not seen a solid debate in Parliament on the most severe economic slowdown that we've seen in 10-15 years. So, Rahul, one small counter to Sunil Alap. He's right when he says that government needs to put money in the hands of the people to increase demand. Rahul, government had the money in its first 5 years tenure. Now, with the economy rapidly declining, we are in a vicious cycle. Government doesn't have enough tax revenues to put into people's hands. That is a problem. So we are in a bit of a trap. So maybe the only solution, Rahul, is for RBI
sell
to
the companies,
like the American Federal Reserve did in
the money will come.
Okay. Niranjan, do you think the worst is behind us? It is true that the new finance minister has rolled out several measures. Will we start seeing, as Jai Panda anticipates, those measures having an impact in the weeks to come? Maybe from the next quarter onwards, do you think things will get better, or do you think that things will either stay as bad or possibly even get worse? Niranjan Hiranandan.
I'm extremely optimistic. I believe that whatever they have done is a good start, but whatever they have done is not enough. So we do have to cut GST. Even if there is a deficit, you have to create that demand which is there. Number two, where I disagree is that we need more government spending, not less. In any recession in any country of the world, the government spending has to be increased further. So if you are doing X amount of money in roads, railways, whatever, highways, ports, etc., I think we need to do 3x or 5x of that which is happening today. So government spending, private spending, public spending, reduction of GST at least for the next 6 months needs to be cut by 20%, even if it means an additional deficit financing of 1,20,000 crores. I'm optimistic if you take
I just
that
want to
measure,
end the show
along with
from
the
where I
liquidity,
started, and I want to put this question to Jai Panda. Mr. Panda, we did some calculations. If the economy grows at this rate, and this is an important thing for people just to understand the gravity of the problem we face. If it grows at the rate at which it's grown in the last 3 months, then in 2024, when we're supposed to be at $5 trillion, we'll only be at $3.49 trillion. At the current rate at which we are growing, it will take up till 2033 for us to be able to hit that 5 trillion target that the Prime Minister has promised. We simply cannot afford to let the economy slide in the way that it is. Yes, the government has made moves. A lot more, Mr. Panda, needs to be done. How soon will we see those moves? Or is the government now running out of fresh ideas and simply doesn't know what more can it possibly do?
Rahul, one of the biggest fallacies in economics and indeed in life is to project the current situation for the future. So when you worry that if we grow at this growth rate for the next so many years, now that's not a realistic worry, because it will not be the same. Life will not be the same. There will be differences, and the differences will be positive because of the steps already taken and the steps underway already. Now, the disinvestments that are already on the that have been announced, that will be implemented in the coming quarters, that will have an impact. And I just want to end by saying one thing. I agree with Mr. Shah that there has to be much more government investment, especially in infrastructure. We have seen that already in the past 5 years. Fully 1 out of every 5 kilometers of highways in India today was built in the last 4 years. And we need to keep up that pace and keep pushing it forward. One last comment. When Sunil Alagh says that we should prioritize the demand side and not the credit mobilization, they are not either or. When you mobilize credit, it also goes to consumers. And when you mobilize credit, it also goes to the mid-cap funds about whom Venu was talking about, who can then start scaling up and produce at lower prices. So I think all of these are under consideration.
But I
will not predict. You are asking whether it will have an effect in the next few weeks. I don't want to get caught into that trap.
Okay, so I'm going to end over here. We've had an important
conversation. Credit mobilization also helps consumers.
And we've heard different perspectives. There are no easy answers to the challenges the economy faces. But this is, make no mistake, the biggest story of our times. The slowdown of the economy and the fact that we're now growing at least the slowest speed that we've grown in 6 years. If you look at real GDP numbers, we're growing at the slowest that we've grown in about 10 years. This is the worst quarter we've had in the last 15 years. There is a real problem. And if we grow at this rate, it will be till 2033 that we won't hit that target of $5 trillion. That's not the promise this government made. Let's hope they can fix it, because fixing the economy is in the interest of every single Indian. You, me, everyone watching. The economy needs to be fixed, because without that, we're all dead. Jai Panda, Nilesh Shah, Sunil Alagh, Rajiv Desai, M.K. Venu, Niranjan Hirandandani for a very important conversation, for joining us. Thank you very much. I'm slipping into a break. We'll keep tracking the Indian economy very, very closely. We'll have more for you on the other side. Stay with us.